John, so good to finally speak with you. Now, firstly, promoters have infused capital in Amtek Auto. That shows the commitment right now. Do promoters stand by their financial commitment to bondholders? Are they ready to pour in more capital should the need be?
Hello there. Good afternoon, everybody. I think the answer to this question is pretty clear. The promoters have always and will always continue to support the business just like they have done over the last nearly 30 years. So I do not see that changing, and if required, I'm sure the promoters will support the business in the future.
John, good afternoon, Neeraj here. Now, before I start this interaction, John, I just want to appreciate the fact that you are here, because please understand, every researcher in my newsroom is hooked on to this. I'm sure a bunch of shareholders are hooked on to this, because you, as a person, are probably the only bridge between the investors and the promoters. So, really good of you to join us, and I appreciate if we can have a really candid discussion as well. Now, my first question emanates from a conversation that I had with a few people who are saying that there is an 800 crore bond repayment that is coming up on September 20th. How confident are you or the promoters of meeting this September 20th deadline?
We have always said that the account we have with all the banks is in standard position. In terms of this repayment, we're obviously in discussions with our lenders, and we've never defaulted on a payment, and we don't intend to default on that payment. So we're very confident that this issue will be sorted out satisfactorily.
You be internally geared for the same, or would you essentially need money from your lenders to meet this September 20th fund repayment, John?
I think at this stage, and I'm prepared to speak to you again in the near future, at this stage I think with negotiations ongoing, I think it's sufficient to say that this situation will be clarified in the next few days, and we're confident of satisfactory conclusion.
But which is fair, and I'll appreciate that conversation as well, but you won't be internally geared for this, right? You will need money from your lenders for the same.
As I've said, if you please don't push me on this, we're in discussions, we will get satisfactory conclusion. I'm quite happy to come back on this programme as soon as it's concluded and talk about the future, which I think everybody started to forget during all the media hype that's been happening recently.
Frankly, John, we will talk about the future, rest assured of that as well. I just wanted to clear these 2 or 3 things because, to everybody's mind, John, these are the more important questions. So we'll just clear that and then get on to the future as well. Just wondering, are there any cross-default covenants in any of the other loans that you have? I mean, my simple question is, should there, due to any unfortunate incident, if you're not able to meet this 800 crore repayment, does it have any kind of bearing on some of the other debt that you have to repay in the future?
It doesn't have any bearing, but I'm restating the fact that we fully expect to be satisfied in the requirements in line with the discussions that's ongoing.
Awesome. Now, the good thing, as Aisha was stating, that promoters have put in some money, however small an amount it may be, but it shows some intent. Now, a couple of articles, John, which I have gone through the last couple of days, mention that they have spoken to bankers who are lenders to Amtek Group, and the lenders are saying that they may ask promoters to, one, pledge more of their holdings. I quote, they may actually ask the promoters to sell some of the group companies to generate resources as well. Are these talks in thin air, or do you think bankers or lenders are actually asking promoters to do this?
I think there's 2 or 3 questions hidden behind that question
more
from
actually.
Yourself, which is a very good question. Yes, probably more. Yeah, I think the first thing I would say is that we have been talking about our debt reduction plan for the last 12 months, and in fact I actually remember talking about it on this program with you some time ago. And we always have a debt reduction plan. We're working through that debt reduction plan, and we have an in-house target of achieving a net debt to EBITDA level within that plan. I think I think it's right now, with all the speculation, to expand on that a little bit. Obviously, the debt reduction plan has many facets. Obviously, we're looking to increase EBITDA, we're looking to increase free cash flow, which will help in the debt reduction program. But we're also looking to sell surplus industrial estates within the group, which will also give us some extra cash for debt reduction. And I think also it should be noted that we are looking at and preparing actually to sell significant minority stake in our overseas businesses.
Okay.
And I think it's also keen to know that we're also looking to investigating with our advisors the hiving off of non-core assets across the group. Or if you put this package together, this is a package where, you know, we're looking to target a $1 billion reduction in our debt by these actions. And I think we ought to really explain, give some substance to that. If you look at our overseas business that we've created over the last 12 months, our overseas business stands currently at around about revenues of $1.8 billion. It's got a very healthy EBITDA for an overseas business of over 10% EBITDA.
Sure. John,
we believe the equity value of this business is over $2 billion. So you can see, if we sell a minimum equity stake of 25%, which is our original target, then this will in itself bring in a huge amount of money.
So, which I take on board, John, and I will come to the free cash flow that you spoke about and the business as well. Just one question. You know, under normal circumstances, if Amtek goes out and sells its assets, I'm sure you will be able to raise the kind of valuations that you're talking about as well. My question broadly is that if lenders, for whatever reason, put some pressure to execute some of these sales at a faster clip, you still believe you'll be able to raise about $1 billion within a short span of time?
Where is the information that the lenders are pressurising us to sell assets?
If they do, John.
That is not the case.
Okay.
We will, if I can't, that's a hypothetical question really, sir. We will sell these assets. These are good assets. The overseas assets itself is extremely well-performing assets with a strong EBITDA and a good customer base. So I see no problem in selling a minimum. You know, if we look at 25, we're looking at a range between 25 and 40% sale of equity in that arena. That's a significant chunk of money which will obviously more than assist in the debt reduction targets.
You know, John, let's just put this into all black and white and quantify for us. When you say that the minority stake in some of your overseas business also will be sold, if you could quantify, put in some numbers to that, and you also talked about some industrial estates. Which ones are you talking about, and how much do you exactly plan to garner out of that sale?
Yeah, I said earlier, we formed a committee to monetize the overall plan, both in terms of the non-core assets and also the potential sale of equity in our overseas businesses. And if our minimum realization will be over $1 billion US. If you look at the equity value of our overseas business is roughly about $2 billion. If we sell minimum of 25%, there's $500–600 million there, plus the $400–500 million in the non-core assets worldwide.
That's still not adding up to $1 billion, but I trust you've done your numbers. Tell me, John, what conversations have you had with your bankers? Are they open to restructure some of your debt?
Yeah, we're having discussions. Amtek Auto is having discussions with the bankers, and fundamentally, that's the discussions are basically to realign the maturities in line with the current cash flows for the Indian operations. And those discussions are in an advanced stage. And we expect to give a positive response of that in the coming weeks.
John, I'm sure, irrespective of all that's happening, you know, alone, I mean, you mentioned about media hype. Media hype alone cannot lead to the kind of fall that's happened in the stock price. I mean, you know, I'm not even going to Castex right now. Let's just stick to Amtek Auto. Have investors spoken to you? Because I saw a couple of deals wherein large investors exited some portions, but the FI holding in Amtek is fairly large as well. what are your investor conversations suggesting right now? Why is it? I mean, when your investors are asking you about the price fall, what is it that you're telling them?
I mean, you know as well as I do, it's very difficult to understand market falls or market increases. So I don't spend too much time looking at that. Obviously, the large fall we've seen recently, you can surmise some of the things that's happened. I mean, obviously, in Amtek Auto's case, the biggest single reason we believe is the exiting from the futures and options. That obviously put massive pressure on the Amtek Auto shares, and that's primarily because we actually released our quarterly results not long ago, and the response from the market was pretty average. It was pretty much in line with our peers in the industry.
Yes.
The Indian market, as you know, is pretty flat. Although, you know, in current trading, I am seeing some slight green shoots of recovery. So I'm hopeful that's flat. So I think in terms of your answer, I think the prime reason for Amtek Auto has to be the futures and options.
Right. And John, before we come to business as well, business questions, and because I do want to find out how are your internal cash flows looking right now, you know, it will be wrong for me not to ask you about Castex. The fact that there is a probe into alleged price manipulation as well, and I'm not suggesting anything, but you yourself would have noted that the price movement was extremely curious. There was probably no reason for the stock to go up to 362 when the conversion happened by the board, and more importantly, the price movement since then, wherein it is in 43 straight sessions that the price of Castex Technologies has come down by.
Yes, and it's, as I said before, it's it's very difficult to give you an answer on this. We cannot really comment. Again, if we look internally, and believe we have done many times, obviously we cannot affect the share price. But if you look at outside influences, obviously the quarterly results was one, but also, you know, in July we had a voluntary conversion of around $60 million of the FCC bond. That released equity in the market. Clearly that had an effect on the share price. But I can't give you an answer apart from that. We know of no other reason why the share price has gone down so much. If you look at Castech, the amount of good news that we've had over the last 12 months has been pretty significant. We've secured new business going forward, new cylinder block business with a number of blue chip companies, which will support the business into not only in this century but the next, because it doesn't start until 17, 18, but it's high volumes. We've got the Castech also now, you know, obviously owns 20-odd% of AGT, our overseas businesses, which I've told you before is very valuable. We've also got a new joint venture with Riken that's starting to come through. The building for that will be operational by the end of this year, and we'll start seeing benefits of that during the second quarter of next year. So we've had a lot of upsides, clearly have had a lot of downsides, which has forced the share price down.
Right. John, you know, just to put it on record, are you completely denying that you are unaware of any stock price manipulation as alleged by SEBI in Castex?
Absolutely. Absolutely. Absolutely denying any knowledge.
Okay. What is it that you at your end are doing as a group company to actually aid the SEBI interrogation?
There's two things. First of all, we will comply with any request from SEBI in terms of investigation, and that goes without question. You know, we're a professionally run organisation. You would expect us to comply with any request from any government body, and we will do. If you also mentioned earlier an audit by the banks. Fundamentally, that is fairly standard practice. when you're realigning your facilities in line with the cash flows, the maturities in line with the cash flows, it's pretty standard to have a due diligence done by the banks in terms of your figures. So again, that's been sort of highlighted as an issue, but it's not really an issue. It's fairly standard practice.
Amtek, John, two questions, final two questions from my end. One is, I hear, of course, you know, some private equity investors, including KKR, I believe, had invested in the past in your group companies as well. Have you had negotiations with some of these to see if they are willing, because the valuations are much more attractive right now if the business is looking good? Are they willing to pump in more money?
We're in negotiations with many companies in terms of as I said earlier, the minority equity sale in our overseas businesses. We're in discussions with a number of players.
Okay, and last couple of questions. One is, how difficult would it be for you to raise money, considering a rating agency suspended the rating in the company for not furnishing information to monitor rating? How would you respond to that? That is my first part of my question. And second, you mentioned business and cash flows. I'm just looking at something that my research team has culled out, John. Debt is not the only problem. Your 9-month inventory loss is at 591 crores versus 34 crores. Your raw material expenses surged despite sales falling. And your operating profit has shrank sharply the last quarter. These are worrying signs. These are not signs of green shoots.
No, I think you've got to look a bit behind those figures because they're slightly misleading. The raw material, you've got to align that in terms of working capital and movement as well. Obviously, we're trying to minimise working capital, drive through manufacturing excellence programs, stock reductions, working capital reductions, work in progress reductions. All of this will help in the free cash flow generation. So some of the figures you see, you've got to actually align the figures a little bit. So in terms of the PAT loss that was in the results in the quarter, there were some one-off PAT losses. Obviously the one-off costs that came through hit that level last quarter, and we reported that in the quarterly results. And also the New Companies Act, we're obviously realigning ourselves to bring ourselves in line with that. So I think you've got to see that as certainly the PAT loss as a one-off figure.
And what about rating agencies, John? I mean, for a rating agency to suspend the rating on the company for not furnishing information, how would you respond to that? That's my final question, actually.
Yeah, I think our finance department are in touch with the rating departments, and that issue will be sorted out soon. Obviously, that's not a great piece of news, but we have to get through this. You said how that is going to affect the equity sale. I don't think that affects it at all. As we said, the overseas equity is a pretty solid company, won't be affected by that rating agency move.
Okay. And okay, John, actually I'll just extend that question to one more. Yes, you're referring to cash flows. Before I come to my final question, just a word. I mean, I've asked you enough probing questions. I would want you to tell us how our cash flow is going to shape up over the next 3 quarters, because you did refer to business improving.
Yes, yeah. I think what's interesting is if we look, we're just about finishing our quarter. Revenues are pretty flat, but they've stopped falling, which is good. And I think we are seeing some green shoots of slight improvements, hopefully not only driven by Diwali, which is coming up soon, but is driven by sustainable recovery in terms of the commercial vehicle market and the tractor market, and hopefully that sustainable recovery is there in the future. We're ideally placed, you know, with relatively low, because of the high investment over the last 2 to 3 years, relatively low capacity utilizations of around about 50%. So we're pretty well based and pretty well placed to capture the recovery when and if it comes.
John, final question really. I believe, correct me if I'm wrong, but I believe JP Morgan AMC had to take a write-off on your bonds as well. Any communication? Have they tried to, I don't know, but have they tried to do any kind of litigation against you? Anything that you've heard to that front?
No, I mean, discussions are going on with JP Morgan. Obviously, you know, you have to remember that JP Morgan bought the NCD from the secondary market. They didn't buy it from us. But NCD is part of the debt, and the company, and I've told you that we're in discussions with the lenders to align maturities with the cash flows. And I think we'll see a satisfactory conclusion to that issue again in the very near future.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.